A $500,000 home could easily cost you over $1.8 million by the time you're done. Sometime last week, President Trump floated the idea of a 50-year mortgage. And at first I thought it was a joke, but it's not. It's real. Let me start by saying this isn't a political video. This is strictly about why 50-year mortgages, for the most part, is a bad idea. The whole point behind a 50-year mortgage is to lower the monthly payment by stretching out the loan an extra 20 years. Sounds helpful until you run the math. Before I get into why this is mostly a terrible option, let me give you the very few situations where it might make sense. You plan to pay extra towards the principal every single month. A long-term loan gives you a lower base payment, which gives you the room to throw more money at the principal. This helps pay the house off sooner and cut down the interest. Homeowners already do this with a 30-year loan. For example, you purchase a home for $500,000 at a rate of 6%. The monthly payment is about $3,000. For this loan, you'll end up paying roughly $580,000 in interest over 30 years. Now, if you add $500 extra towards the principal each month, you shave off about 9 years and avoid paying around $200,000 in interest. So if this is your forever home and you're disciplined, okay, that can work. The second scenario is your credit is rough and this is the only way into a home. In Connecticut, it's sometimes easier to buy with okay credit than to rent because mainly landlords want excellent credit while lenders often accept a 620 credit score. If someone plans to refinance 2 or 3 years later, that's fine, but you're still gambling on interest rates actually dropping. Now, when is a 50-year mortgage a bad idea? Pretty much any other time. The biggest perk of home ownership is building equity. In the beginning, you'll pay mostly interest, but over time, you'll build equity, and equity lets you upgrade your home, cover repairs, or even buy another property. And with a 50-year mortgage, you don't build meaningful equity for a very long time. And on top of that, interest rates would be higher the same way a 30-year mortgage is higher than a 15-year mortgage. If a 50-year mortgage existed today, lenders would almost definitely price them somewhere around 7.5% to 8.5% because the bank is taking on way more risk for more years. And here's the painful part. At those rates, you wouldn't just pay for the house once. You'd pay for it more than twice in interest alone. A $500,000 home could easily cost you over $1.8 million by the time you're done. And if interest rates don't drop later or your home value dips, refinancing becomes almost impossible. When you've spent years paying mostly interest and barely any principal, you don't have much equity. So if the home appraises lower, lenders won't refinance you into a smaller loan. I was going to get into transferable interest rates and portable mortgages, basically taking your interest rate with you to your next home, but those deserve a separate video. So I'll leave you with this. Would you ever sign for a 50-year mortgage? Do you honestly think this gives buyers a real relief? Let me know in the comments below. Until next time.